Calgro M3 released its interim results this morning, and Ben Pierre Malherbe, who's the CEO of Calgro M3, joins us now from the JSE. Thanks so much, Ben Pierre, for joining us this morning. Let's get straight into the numbers, because despite the challenging trading conditions in the construction and property development sectors, we've had impressive numbers come through from your company. Revenue up 117%, HEPS up 372%. So let's go through some of the drivers of the kind of momentum we're seeing here.
Morning, Alishia. I think what you're seeing happening is a pipeline that we've been working on for the last 3 years just coming through and being converted into construction now. So it's construction that's driving this.
Construction is driving this. So where exactly? Where are you seeing some of this demand filter through? Because certainly what you do boast is a strong project pipeline.
Alishia, we're playing in the integrated market, and the projects under construction currently, if you look at Fleurhof, a project with 9,600 units under construction, about 1,000 units under construction there. Then 2 projects in Jabulani, in Soweto itself, a project of 4,200 units in the CBD with about 500 units under construction. So we're just rolling that into, converting that into revenue.
Run us through the status of things when it comes to state spending specifically, Ben Pierre, because there have been delays in infrastructure spend by government, and that continues to impact, integrated housing, and the group certainly is not excluded from this kind of trend that seems to persist.
No, we're definitely not excluded from the trend, and the trend is still there. I think what we are getting right at this stage is a balance between working for government and private sector. If you look at our exposure in the integrated market, where we work for the residential market, people that can afford bonds, as well as the social housing side and the fully subsidised side of the market. So it's a combination and getting the balance right.
And one would assume that that bodes well, certainly, for your cash flow risk as well.
Yes, it does. We've got a cash flow risk is always a big risk in our business, and getting paid. So we're balancing it between the different sectors.
Looking at your debt levels, I mean, that's a figure that stands out. We've got debt levels and gearing having stabilized at 70%. How much higher can you afford that to go, or is that pretty much the top that we're looking at?
No, we'll be comfortable with a 1.5 to 1 ratio debt. We're a development company and it's cash intensive. We need debt. I think we came through bad times and we tried to get it as low as possible. But with the rolling out of new projects, we'll definitely up it again, and we're happy with a 1.5 to 1.
Let's hone in on some of those new projects, Ben Pierre, because certainly some geographic diversification coming into play. Just last month, you announced the expansion of your local footprint into the Western Cape area. Just how much further do you see that footprint extending? Of course, this being the second transaction, where your initial one was done in Bloemfontein.
Yeah. I think we were very cautious of expanding out of Gauteng. We said, let's stabilize operations. I think we're there now. I think we've done what we wanted to do. We've achieved our expansion, and we've got to stabilize those operations first before we'll start looking further again.
What's some of the caution around expanding extensively at this stage?
I think uncontrollable risk is probably our biggest risk in the company at this stage. There's huge opportunities out there, and we've just got to be cautious and grow this business slowly and not try and expand too quickly.
In terms of what target market, because you've got the low-cost housing model on the one side that you're feeding into, but then there's the mid to high-income housing sector that you cater to as well. But that seems to not have seen the kind of improvement that had been expected.
No, we haven't seen the improvement there as yet. On the high end of the market, we always said we'll never exceed a 20% exposure. I don't think we've got a 5% exposure currently, and the market simply haven't recovered as yet. Whereas the lower end of the market, the sub 500,000 rand market, is healthy.
To what extent is end user financing still a challenge for this market, or is it becoming more readily available? What are prospects like? What are prospects looking like moving forward in that regard?
Our prospects are looking good. I think it will always be a challenge. I think you'll be naive not to think it will be a challenge, but currently we're receiving 100% bonds from the financial institutions. 6 months ago, a year ago, not all the banks were playing in this market. They're slowly coming back, and I think we're comfortable where we are currently.
You've also seen some diversification in terms of the kind of market you're catering to, Ben Pierre. There's some movement into the retirement and lifestyle estate category, also for green construction. Run us through some of that strategy and how you see that feeding into prospects for the business as we progress.
Alishia, the high end of the market will always be there. We purchased properties in 2006, 2007 in the good years. We're sitting with them. It's not a market to sell it. We've got to develop it in order to get our returns back. On the green side of the business, it's much easier in the high end of the market. You're working with an educated market, and it's easier to work on the high end of the market when you go green. And the cost is not so on the edge either. When you go to the lower end of the market, where there's no subsidy or no incentive for the developers to do green development, it comes at a cost to the developer. Although you pass it on to the end user, it comes at a cost. Where in the high end of the market, it's easier to accommodate those changes to go green.
Overall, is cost something that you're finding very hard to, to mitigate against rising cost challenges?
I think rising costs is not a big issue in the construction industry currently. I think we haven't seen huge increases over the last year. I think with the volumes coming down, especially on the civil side, you're actually seeing better prices coming through. So we don't see that as a huge risk currently.
Thanks, Ben, for joining us this morning. Ben Pierre Malherbe, who's a CEO of Calgro M3, joining us live from the JSE this morning.